Where do you see crypto going right now?
I don't know. The chart looks like it wants to go lower again and have another spike low, and my view for a while. However, the crypto markets have not made a new low versus last year, and a war, and you haven't made a new low. Okay, that's telling us something. Now, maybe that can change.
Where do you see crypto going right now?
I don't know. The chart looks like it wants to go lower again and have another spike low, and that's been my view for a while. However, the crypto markets have not made a new low versus last year. And I think we've thrown 8% inflation, the market pricing in at 1.8 rate hike, and a war, and you haven't made a new low. Like, okay, that's telling us something. Now, maybe that can change, but I mark that down as interesting. I've got a lot of technical divergences. A lot of the on-chain activity is very interesting. So I'm still thinking that we probably captured the downside in this 50% down bracket that we've been in with Bitcoin and ETH. So that's where I think we are, but I'd like to zoom out. So just like we did before, where are we before? Brian, if you pick up the first chart, so I've talked about this before and just updated it for Global Macro Investor, my research service, which is crypto users versus the internet. What we did here, well, Remy did it for me, was we started at 5 million users each. When they both hit 5 million, we then start measuring. And what we found is that crypto has been significantly outperforming the internet in terms of adoption. We're way ahead of internet adoption. If we just continue at a kind of slightly slower pace, we get to 5 billion users by the end of the decade. So that's basically total adoption of crypto.
And by the way, it makes sense that we'd see that rapid increase in the rate of adoption because it's being monetized by the users. You know, Facebook is a great platform, but it's been monetized by Mark Zuckerberg, the early founders and investors. What makes crypto different is the capacity for people who are using the network to profit from some of the economic upturn. That's, I think, maybe the most significant difference.
Of course. So like the internet, we didn't profit. We couldn't buy tokens or shares of the internet. We had to find the companies that were going to win. The internet won, clearly. But here we can own the network, right? This is how powerful it is, there's something called that. So Metcalfe's law is the network effect, but there's the other thing called Reed's law. And Reed's law is when you build network effects upon network effects and you get true exponentiality. So if we're thinking here, we're building foundation layer was the internet, then mobile data, 3G and all of that starts accelerating it, and broadband and all of those things, and then you add the internet of value on top. Of course it's more exponential by its very nature, and the fact that you can own part of the network makes it more attractive for everybody to be involved. So if we look at the next chart, I've got another chart of this, just zooming in a bit. So here's a couple of assumptions. So what you can see is in the first 6 years, the internet grew at 76% a year or 78%. Crypto's been growing at 117%. So it's much faster growth. So we're at 300 million users now. At the same point, the internet was only at 119 million. So you can see the scale of how this happened. So if we assume that suddenly everything slows down, crypto adoption, and we grow at the same speed the internet did over the next 4 years, so this is now from year 6 to year 10, we get to 500 million users. 1.2 billion users. If we just assume the ratio lower, then we still get to, ridiculous numbers of 2 billion by 2026. So it's incredible. And when you're growing at 100% a year, it's 4 billion the year after. Yeah. And then, so the next chart is another interesting one about adoption. And this is the one I'm pretty proud of. So I've been bleating on about Metcalfe's law, network effect, how to value these things. And it's very hard to do because Metcalfe's law is quite a complicated formula and you don't know what data to use. So I thought, I wonder if I can approximate it. And Remy and I went all of the data for writing Global Macro Investor. And what we built was a network value model. And we tried a number of different things and found out you can explain every crypto network by two simple things. The volume traded on a daily basis, monthly basis, and the number of active wallets. Once you map that out, one multiplied by the other, the chart exactly fit that of Bitcoin. So we thought, okay, this is interesting. So basically the network is the amount of activity on the network, not in number of transactions, but in value that get changed every day, and the number of people exchanging value. So if you think of a network, it kind of makes sense. So I wanted to then test it against Ethereum. So if we look at the next chart, it works perfectly for Ethereum as well. So that's Ethereum. So really interesting. And it also worked for XRP, which is weird. You wouldn't imagine it would, but XRP works exactly the same. So then I tried it for Polkadot, and it works exactly the same. What it shows you is everything in a network is basically volume of transactions in dollar terms or value terms and the number of people using it. That's it. And that, I think, is a big breakthrough for the space. I don't want to pat myself on the back. Now, doesn't mean I can yet forecast using this, but I can show what drives the value of a network. And I'm working on other models now to start having forward-looking indicators to understand, okay, what's really going on. No, one more thing is, look, there's big picture things. I covered gold in the update that I did, which is right now, you don't know who owns what asset. You don't own anything because the government governments take it away from you, which is we've kind of known, but it's been writ large in the last few weeks. And I think, even though gold is coming off because it had a good squeeze higher, I think we're going to see more action there. The one to watch, I think, is the dollar. The dollar is really important, and the dollar is very strong. I do expect the central bank try and slow it down at some point, but the dollar going up basically creates credit issues for the global economy. We've already seen places like Nigeria running short of dollars. We're seeing it in Sri Lanka. We're seeing it in the periphery. It always happens in the periphery first and then comes back. So there is liquidity issues further out in the system. So just keep an eye on the dollar. The more the dollar goes up, the more liquidity issues you'll face, and the world struggles a bit. So just keep your eye on that.
What's happening with the dollar? The dollar keeps rising.
So this is going to tie back to Bill Tai as well. So Bill Tai talked about petrodollars and electrodollars, and that crypto is the electrodollar based around electricity, while the petrodollar was based around supply and demand for oil. So we've been in a petrodollar system since we floated off the gold stand. Now, what does that mean? It meant that the US was one of the biggest importers of crude oil in the world, if not the biggest importer. So they would spend dollars, and these dollars floated around the global system, keeping it liquid. But the shale oil revolution, as Russell points out, did the opposite. It meant that the US didn't need to import as much. Yes, it has to import some different grades of crude and stuff like that, but generally speaking, it's self-sufficient in oil. So that is a lot less dollars into the global system. So if there's a lot less dollars in the global system, the dollar goes up. It's like ETH burning. It's like Bitcoin supply. There's less dollars sloshing around the global system because the US aren't spending it. It drives the dollar higher. And that's one of the things that the dollar's strong for a period of time.
Nominated by finance magnates as the friendliest to use UI in the industry, MargeX brings you one step closer to a Bitcoin-based trading platform that allows traders to trade with up to 100 times leverage. Not just that, but MargeX also provides traders with access to various global crypto markets. What this essentially means is that you can make money when the market is on a downfall, and alternatively, when it's on the rise, you can expect up to 100 times derivative leverage. The great tech behind the platform incorporating price manipulation protection and the ability to conduct 100,000 trades per second, short with up to times 100 leverage to earn on the free-falling market, makes this one of the best and most friendly user interfaces on the market for beginners and experienced traders. It literally will take you just 5 minutes to start. So, what are you waiting for? Join in today and hedge your crypto holdings by short selling. Also, always remember, the markets fall much faster than they grow. Therefore, short to multiply your crypto holdings to be prepared for the next bull run.